Hello students, welcome to Legacy AIS Academy. Today our topic of discussion is IPO. What is IPO? What are the IPOs? We'll try to discuss this in more detail. We'll try to understand that how IPO works, and also we're trying to discuss the reasons why there has been sudden increase, especially since last 1 year, in the number of IPOs that has been launched in India. So first of all, if we try to understand what is an IPO, it is basically a short form that refers to initial public offering. Now the context in which we are discussing today's topic is because the year 2021, especially if you look at this, has been considered a bumper year or bumper period as far as the Indian primary market and the launch of IPOs are concerned. As per their data, we can see almost 63 companies have launched their IPOs in this particular year, and by the IPOs they were able to raise almost a stellar sum of rupees 1.2 lakh crores, the highest amount that has ever been raised in the history of Indian market in a single calendar year. And also data suggests that not only in the year 2021 but also in the preceding year of year 2020, the $4.6 billion of money were raised by the companies by the launch of their IPOs. So first of all, let us try to understand what is an IPO. In simple terms, IPO is nothing but it is a process that has been devised or that has been put in place in the arsenal of companies, whether it is private companies or public companies, and through the process of IPO generation, IPO launch, the companies can raise fund by offering shares either to the investors, large investors, institutional investor, or even to the public. This route is open to both, whether it is a private companies, for example Paytm, or even to the government companies like LIC, that is Life Insurance Corporation of India. Once the IPOs are launched in the market, the companies can allow themselves, or companies can actually apply for the for the listing in the stock market or a stock exchange of India by taking approval of the SEBI, that is the regulator of the stock market of India. However, all companies are not eligible for launching their IPOs. There are certain rules, certain criteria that have been set up by the SEBI, that is Securities and Exchange Board of India, for any company to launch their IPO. So let us first try to understand that what are the grounds of eligibility for launching an IPO. The first criteria that has been defined by the SEBI is that the companies should have a net tangible assets of at least rupees 3 crores. Now, net tangible asset is something that we can consider it, or we can understand these are the physical assets a company possesses. Physical assets, tangible assets means something that can be sold, that's something that is visible, something that can be physically felt. Apart from that, the second criteria is the net worth of companies should be of rupees 1 crore in each of the preceding 3 full years. For example, if any company is going to launch their IPOs in this particular year 2022, so for 2021, 2020 and 2019, companies should have a net worth of minimum rupees 1 crore in each of this year. So what is a net worth and what is the difference between tangible assets? This is a very fine difference. When we are talking about net worth, we take into consideration all the tangible as well as intangible assets of the company minus the liabilities a company can have. While when I talk about net tangible assets, we only take into consideration the physical assets, the tangible assets of the company minus the liabilities. So these are the major differences between these two terms. Apart from that, there is also a third criteria that has been given by SEBI, and that is in the terms of the tax, or in the terms of the profit, average profit that the company is earning. And in that terms, the minimum average pre-tax profit, that means profit a company has garnered before paying the tax, should be minimum rupees 15 crore in the last 3 years of the preceding 5 years. For example, if company is going to launch this IPO in 2022, so between 2016 to 2020, that is 5 years, in that 5 years, at least in any of the 3 years, a company should have obtained a minimum profit of rupees 15 crore before applying the tax or before paying the tax. So once a company is able to fulfill all these 3 criteria given by SEBI, then they can launch their IPO, and once they are sure that they are fulfilling the criteria, then they can actually offer or submit offer documents to the SEBI. In this offer document, company is expected to put all the relevant information on the basis of which investors or traders can invest in the particular company. For example, in this particular offer document that is submitted by company to the SEBI consists of all the information regarding the promoters of the company, regarding what are the projects the company has been involved in or is planning to involve in the future, what are the financial details of the company, and we can say annual financial statement of the company is also given due importance here. And also the most important is the company has to clearly state its objective, that what are the main objective on the ground of which it is trying to raise money by the issuing of IPO. Once this offer document is submitted to SEBI, SEBI scrutinize all the details and then they give a go ahead for the launch of IPOs of the company. Once the IPO is launched, the proceeds or whatever the money that has been received by the selling of IPO, if it is a private companies, then the proceeds can go to promoters or existing investors if the money is being raised for sustaining its debt or something like that. However, private companies can also launch IPOs if they want to increase their if they want to increase their area of operation, if they want to do some further or investment in some areas, and then in that case the money proceeds of the IPO can be utilized for future growth, expansion, as well as even the debt restructuring and debt reduction of the company. However, if a company that is launching IPO is a government company, for example LIC, that is going to launch IPO very soon, in that case all the proceeds that the company generates from the IPO is directly sent to the government exchequer, and now government can decide how they will want to spend the money they have gathered from the particular proceeds. One other important point whenever IPO is launched is regarding fixing the base price, fixing the security price of the IPO or the shares of the companies, on the basis of which the bidders or the investors can purchase the company's share. So this is done by two entities. First is the issuer, that is the company who is launching the IPO, and second they associate themselves with the merchant bank. And the main, we can say, objective of the merchant bank is that to evaluate the total valuations or to calculate the total valuations of the company. This total valuation is actually calculated on the basis of the assets of the company, what is the revenue that the company generated, the profit of the companies in past year, and also the projections regarding how much money a company is expected to earn or receive in the future years. So it depends on all the future projects the company is planning to go ahead with. So future cash flow projections. Based on these parameters, the merchant bank along with the issuer come with the total valuation of the company. Once the total valuation of a company is reached, suppose that for example it is $100 million. In that case, the total valuation of a company is then divided by the number of shares that issuer wants to issue for the initial public offering. So example, if we have 10 million shares that the issuer want to issue for IPOs, in that case the security prices will be total valuations upon post offer share outstanding. That means it will be somewhere about $10. That will be the issue price on which this particular price the company will issue the shares to the investors. Then after this, coming to the next point, that is the advantages. Obviously, since IPOs has become a very we can say very important ways or very popular way of raising money from the market, they accrue certain advantages, offer certain advantages to the company. So three main advantages of IPOs is, first of all, as we have discussed already, that it is to raise the capital. If any company have set up and they have developed but they want to expand furthermore, they want to launch more projects but they are not able to get sufficient loan, or if they do not have sufficient we can say sources of income or sources of revenue, in that case they can raise capital and then this money can be invested in the future projects, and the return that the company will generate will be then we can say given to the shareholders of the company. Apart from that, since before IPOs, company is actually funded by few personals or few investors or few companies, and that is why they are not very broad or diversified shareholder base. By launching of IPOs, as company become public listed company, as the shares are sent to the market where people can, this everyday people, traders or retail investors can invest in the shares, it diversifies and broadens the shareholder base of the particular company. And not only that, IPOs also offer an advantage that it can provide an exit to the investors. If suppose some investors are there who have 50%, 45%, 30% stake in a particular company and they want to dilute their share. So if company is listed publicly, they can easily sell their share in the market and can exit from the company as per their desire. So these are three advantages that IPO offers. However, there are also certain limitations that comes when the launch of IPO is done in any particular company, is that once it is publicly listed, it has to comply with a much harder regulations. It has to, with the SEBI, it has to submit all its annual financial documents and everything, and it is scrutinized at much, we can say, smaller levels, a much detailed level. So these are certain limitations. However, the advantages offered are much more higher in this particular case. Now coming to the next important question is that if a company is launched IPO or has launched its IPO, who will be the investor who will buy these shares of the company? So investors can be classified into two categories. First, we will have retail investor. The retail investors can also be then classified into two different categories. One are those people or those individuals who have invested up to rupees 2 lakhs in any particular share or in a particular IPOs of the company. They are called as retail investors. And one other retail investors are a group of people who have invested more than rupees 2 lakh in the IPO or shares of the company. They are classified as high net worth individuals. So we have retail investor who have invested less than rupees 2 lakh, and we have high net worth individual who have invested more than rupees 2 lakh in the company share. Apart from these, we also have another group of investors that are classified as qualified institutional buyer. QIBs can be of various types. For example, it can be either mutual fund holders, it can be pension fund holders, also commercial banks, as well as the, we can say, insurance companies. We can have DIIs, FIIs, that is domestic institutional investor, foreign institutional investor, foreign portfolio investors. So these all actually invest a very huge sum, hefty sum in the IPOs of the company, and that is why they are categorized as institutional investor or institutional buyer. These two are the major investors in any particular IPO. Now coming to the main topic, that why in the last 1 or 2 years we have sudden rush of the Indian companies that are trying to launch their IPOs in the Indian market. And we can understand this from three basic reasons are there. First reason, we know that the whole world is witnessing a pandemic, that is COVID-19 pandemic, since year 2020, and due to this, we can say the operations, the revenues, the profits of the companies, of large number of companies, has been severely or adversely affected, and also because of this, the banking operation has been affected, and the banks are not willing to lend or give loan to the companies at a rate which it was earlier possible. So to have an alternative method of raising money for their projects or upcoming projects, companies has devised this particular route of IPOs. Not only that, it has also been boosted or bolstered by the increasing participation of investors in the Indian market. For example, if we look at the State Bank of India's report, then it is believed that almost 14.2 million new individual investors have entered into the Indian market in the single financial year of 2020-2021. So all, especially if you talk about the young generation people, there are large number of people are investing in Indian market, and so we have very increased level of liquidity in the Indian market, and the money, because there is increased level of liquidity, the companies wanted to take advantage of this increased level of liquidity and are trying to launch their IPOs and raise money through this particular methods. So that is why we can say the main rush or the main reason behind the rush is so the companies can raise capital and expand the business, as demand will also grow rapidly, because many companies are expecting that as the COVID pandemic is coming to its last stage or coming to its end phase, again the whole market or the whole economy will try to recover, and the demand of different commodities and services will rise, and so that companies can expand their business and earn more and more revenue and profit. And in last particular year, we talk about the most IPOs that has been popular in Indian market, especially it has been three companies. We have Nykaa, we have Paytm, and we have the Zomato. These are very popular companies. They have raised the IPO. They have actually issued the IPO and shares in the market, and have been able to raise a very hefty and good sum of money from the Indian market, from Indian investor, to utilize in the future projects. So that's all about the story behind the IPOs. I hope you understood the video. If you like it, please like, share, and subscribe. We'll come again soon with another interesting topic. Till then, take care. Thank you very much.